Good day, everyone, and let me start by congratulating NECA for the fourth summit. I think it's commendable that such a credible private sector group are speaking to issues of national importance and helping us to bring our thoughts together from the private sector, collaborating with the public sector for a better Nigeria. Thank you also, NECA, for inviting me, and apologies I couldn't be around physically because of other equally important commitments. Now, I'll speak to the topic around balancing fiscal tax reforms with economic growth, prosperity, and sustainability. I do think that this is a very important topic and is very apt at this time of our national reform and development. Let me start first and foremost with the ongoing fiscal and tax reforms, which many people are aware of. And of course, we have the four tax reform bills, which are now waiting presidential assent for implementation to commence. It's important to spotlight the need for cohesion in government policy, not only in terms of how they are formulated, which of course has to be inclusive, private sector, public sector, civil society, and even the international community, so we can get the best outcomes from those policies. But we know beyond policies that are written down, how they are implemented is even more important. And for us, we are not measuring efforts and celebrating attempts. We want to celebrate the outcomes and the impact that those outcomes make. The reforms are much bigger than tax, but tax is no doubt a big component of the overall reforms. And we set out with a very clear objective given to us by Mr. President that the reform should first and foremost be people centric. In other words, it's about people. And those people run businesses. So it's also about businesses. Number two is for those reforms to be growth driven. We want to grow, and when the economy grows, everything else will follow. You will reduce poverty, you will enhance the purchasing power of the people, businesses will grow, individuals will earn income, pay personal income tax, they will consume and pay VAT, businesses will make profit and pay corporate tax. So for us, it's not revenue first. That will be placing the cart before the horse. For us, it is prosperity and growth first, and the revenue will follow. And of course, one other very important objective of the reform is competitiveness. We want Nigerian businesses to be able to compete within Nigeria, within Africa, and with the rest of the world. We want Nigerian companies to become multinational so that even when prices of oil, it will always happen, when it becomes volatile, it goes up today, tomorrow it comes down. There's a problem in Israel and Iran, it goes up again. You really can't plan with that level of volatility. We then also get concerned about, are we going to have enough dollars to meet our demand? Naira depreciates, everybody panics. Imagine if we have large Nigerian multinationals earning billions of dollars from around the world, from rendering services to producing goods and intellectual property. Our country will be more stable and our growth and prosperity will be more inclusive. These are the main focus and objectives of the reform. I also like to appreciate NECA for the role they have played in contributing to our thought processes, also critiquing what we're doing in a very constructive manner, which we welcome, and we in fact encourage that more of that should be done, as well as being a very reliable partner in this journey. The objectivity and the love for our country and the passion is quite evident. And that's what we like to encourage everybody to do. Because at the end of the day, if we focus on our sectional interests and some groups to the detriment of the country, it is not sustainable. If we have a Nigeria that works, everyone can find a place within that Nigeria that is working. And that is how to truly promote shared prosperity. I think the other area I want to speak to is that these reforms have been very intentional in addressing some of the critical areas of concerns for businesses. Like Mr. President promised on day one during his inauguration on the 29th of May 2023, that his government would address all the concerns of the private sector and businesses regarding investments and particularly multiplicity of taxes. We set out with that sole objective of addressing those concerns. And I'm happy to announce that we have made some progress, good progress, of course, but the journey is not finished yet. We still have more work to do. Some of the changes we have in the tax reform bills include those that will reduce the cost of doing business for businesses. For example, businesses will have the opportunity to claim input credits for VAT they pay on assets, including those ones for setting up their factories, for example, or it could even be just buying equipment that you use for your business. You'll be able to claim the input credit 100%, so long as you provide vatable services or your product are zero rated, like we say in taxation. We also have input credit for services that businesses will also enjoy. Overall, this would reduce significantly the cost of doing business for businesses, which should then increase their profitability. And we also hope that they're able to pass some of these savings to their customers so that we can see a reduction in prices of goods and services to help us moderate inflation. Another important provision in the bill is the reduction of corporate income tax from 30% to 25%. Even though we would have loved for this to take effect immediately, what we have in the tax reform bill is that 25% reduction will take place and take effect at some future date as may be approved by Mr. President on the advice of the National Economic Council. And of course, we know that reforms are hard and sometimes you have to strike some balances. As we want to provide reliefs to businesses, government is also legitimately concerned about the impact on revenue. So we have to take these things one step at a time. But it's good news from my point of view that we're able to, our lawmakers agree for this to be provided for in the law. We also have provisions to increase the purchasing power of the Nigerian people. Because when we have people who have the ability to make effective demands, then there will be need for businesses to expand. And when they expand, they employ more people, they make more profits, and they pay more taxes. So one of those is the zero rate of VAT on essential consumption. And when we say zero rate, what it means is there'll be no VAT along the value chain of those products, and should the producers of those items incur VAT in the process of producing the items, they'll be able to claim their VAT cost back from the government. For example, take bread. If bread becomes zero rated, which is what we have in the law, it means that there'll be no VAT on bread. But the person producing bread will probably will have a bakery. Because they have a bakery, they will buy things on which they would have paid VAT. Those VAT they'll be able to claim back, and that means the price of bread can then come down. So food, education, healthcare are all zero rated under the tax reform bills. And those items constitute more than 60% of the consumption of households in Nigeria. In addition to that, transportation, accommodation are also VAT exempt. The new tax laws would also increase the threshold of exemption for individuals in terms of their income. So anybody earning about up to 1.3 million naira a year, it's not a lot of money, but given where we're coming from, it's significant improvement. So which means on 100,000 naira, a little bit more than that, you will not have to pay any personal income tax or PAYE at all. This will give our low income earners a little bit more room to meet their basic needs. Um, Based on the data available to us, that number alone accounts for more than one third of all workers in Nigeria, both private and public sector combined. Now, once they have more purchasing power, they'll be able to buy more and the economy will grow. There are also provisions in the law to reduce the burden of taxes on businesses, such as reduction in withholding tax rates, as well as faster refunds for businesses, so that you will not be spending 35% to borrow from the bank only for the money to be tied down with the government, and that increases your cost of doing business. All these are also already addressed in the new laws. We also have the opportunity for Nigerian businesses to venture outside and become international. And should they have to incur taxes abroad, and it's also liable to tax in Nigeria, there's a provision for what we call unilateral tax credit. What is the objective? The objective is you don't have to pay double tax just because you are doing business internationally, because we want to encourage you to become multinationals. We also have provisions that will bring opportunities for our young people, particularly within the digital economy. There are countries like the Philippines, India, where they have millions of their young people working within the global digital economy, earning a lot of money. The record we saw shows that the likes of the Philippines made more than $30 billion. India made more than $200 billion. Imagine 1 or 2 million Nigerians earning between $1,000 to $2,000 a month. Just they don't have to relocate out of Nigeria. They can be here in Nigeria and work within those global systems and earn their cool money at the end of the month. $2,000 a month is enough to lift out, people from poverty. That is easily around $1 to $2 billion every month of cash flow of FX to our country, which will help strengthen the naira and stabilize the exchange rate, and also help improve the lots of Nigerians. So, in addition to that, we also have some critical areas of reforms that we have addressed in these tax laws. One of it is creating a level playing field. We know, for example, many companies are within the domestic market. They pay taxes and they have to compete with those who are in the free zone, who may not be paying taxes and they are selling to the custom territory. This is part of the reforms that we have undertaken, an area we are addressing. We want to promote investments across the country, both for investment within the domestic market as well as investment in the special economic zones. We do not want to undermine those who are doing business and paying taxes. So the idea is to refine the laws, make it very clear that if you are selling to the custom territory, that is the domestic market, you should pay all the applicable taxes. Of course, if you do exports or you do your activity within the zone, it should be tax free, in line with global best practices in this area. At the end of the day, we believe this will be a win win for everyone. We also have reviewed the incentive scheme. For example, the pioneer status is no longer in our tax laws once the laws take effect. In place of that, we have introduced priority sector incentives, whereby we have identified the priority sectors, whether it's manufacturing, whether it's even refining, some of it to do with the digital economy and technology services. We have things around utility like power. All those critical sectors of our economy have been identified with threshold as to minimum investment, and then there's a sunset for how long those incentives will be enjoyed, ranging between 12 to 20 years, and so on and so forth. The idea being that we want to stimulate investment in these critical areas. We also have tried to address issues around lack of clarity for incentive regimes, and then to reduce the application of discretion. Let the rules be clear to everyone. You don't have to know Mr. President or who is finance minister. You just have to be doing your legitimate business to be entitled to what is available to everyone else. This way, we can create a level playing field for businesses to thrive. This is one of the areas we have addressed in the tax laws. Another important area is to do with payment of taxes in local currency. We have an instance today where the law says, should you carry out any transaction in foreign currency, you must pay the taxes in foreign currency. And then imagine many Nigerian companies who do not earn foreign currency at all, and they have to pay for ERP, that's the enterprise resource planning systems. They have to pay for softwares, even for doing online meetings. And those transactions are settled in foreign currencies, mostly dollars. Imagine going to the FX market to bid for the dollar to pay the foreign service provider, and then going back to look for dollars to pay VAT and withholding tax. This is not helping our country at all. We have to promote the use of Naira, and we have to develop and build confidence in Naira. That is the only way to have a stable economy. This also has been addressed in the tax law. In addition to that, we have been very intentional in the design of the tax reform bills to try and address issues around corruption. This corruption, as it is today, cuts across. We have very honest, reliable people across public sector, private sector, but we also have those who are not very honest. So one of the areas we are addressing this is introducing more technology, including fiscalization. Fiscalization, for example, means if we issue an invoice, that information is captured automatically within the system of the tax authority. Should you under disclose, we will be able to find out. If you import an item and you do not disclose for import duties purposes, or you haven't paid import duties correctly, we would also find out. The objective is that if you operate in a society where some are doing their best to do the right thing and others are not doing the same thing, if you do not address that, you are essentially and effectively giving incentive to bad behavior and punishing good behavior. We need to address that, and these reform bills will do exactly that. We want to make it more expensive for people to do the wrong thing and simplify doing the right thing, and in fact, reward it as much as possible. Tax consultants or tax agents will be regulated because sometimes we find that some of them facilitate the corruption that we see in the system. So they have to do the right thing. Professionals must uphold ethics and they must be technically competent. Let there be reward for doing the right thing in Nigeria so that we can all work towards a purpose that promotes prosperity and national development. This is also going to be in the bills. At the end of the day, the compliance process will be simplified. There will be more self-service where, for example, you should be able to get your clearance certificate. In fact, we're hoping that we won't have to worry about tax clearance certificates anymore. We also have, many people will be familiar with the certificate of fixed asset acceptance. We call it CAFA, where you buy an asset and you have to go through this rigorous, tedious process to get it certified so you can get capital allowances. And we do not believe that this is still relevant in this time and age. That also has been addressed, and there will be no need anymore for anyone to try and get CAFA before they can claim deductions for their investment in assets. Of course, if you want to get private sector incentive where you may be exempted from paying taxes for up to 10 years, there will be a need for that department, industrial department, to validate your investment because, of course, we trust you, but we want to verify. Other than that, you will not have to worry about CAFA, and you will see this trend along many of the provisions in the new tax laws, reducing complexity, reducing multiplicity of taxes, and reducing multiplicity of collecting agencies that you have to deal with. Like I said earlier on, this work is not done. One critical area that we have to address as a people is the overregulation we see around. There are processes that are more than 10 when they could be one. There are things you have to worry about for 2 months when it could be 2 days. We have fees that are charged on businesses that are ridiculously high and for which there is little or no accountability. We need to address that. These things add up. At the end of the day, whatever we do, businesses will do to the people. If you raise the cost of doing business, the cost of goods and services will go up. I was very pleased that the governors recently agreed that we have to address the nuisance taxes, which our committee has identified, such that we saw people moving goods, something like yams from the north to the south, and they're having to pay more than 700,000 naira on one trip. They were being stopped more than 50 times, 2005 here, 3005 here. By the time you get to the south, the poor person cannot afford yam. This is self inflicted pain, and we have to address it as a matter of urgency. Let's make Nigeria work for Nigerians, and may Nigeria work for all of us, and may Nigeria win. So we are quite optimistic that these reforms are the beginning of a journey to the Nigeria of our future, the Nigeria of our dream, and it calls for collaboration, especially now that we're moving into the implementation phase. This is not something that can be done by anyone alone, not by government alone, not by the private sector alone, but by all of us collectively. Let's build capacity. Let's continue to criticize constructively with the intention and the objective to build, not to tear apart our country. Like I said during my birthday lecture, if you wish ill of your country or you want your government to fail, it's like taking poison and hoping that it kills your enemy, to paraphrase Nelson Mandela. So, once again, a very big congratulations to NECA on this very important summit. And then, congratulations to everyone attending the program, and I'll be watching this subsequently. God bless you all, and God bless the Federal Republic of Nigeria.